What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So yeah, we're going to start on the monthly, and then we're going to work our way down as per usual for a classic Sunday weekly review. I am expecting quite a nice week this week, especially after the recent couple of weeks we've had when we've finally got some movement and expansion in one direction. Now, one thing I want to bring our attention to first on the monthly is this fair value gap that you can see we're clearly trading inside of. So between this low and this high, we have a fair value gap. And you can see just recently we traded above the 50% level of it. So I am anticipating us to try and fill this fair value gap. I would like to think that price can continue to the high of it. One thing that ICT has taught before is that when we reach 75% levels, it's very classic for price to then just run up and reach for the 100% level. So we do need to take that into consideration. But one thing especially is the 50% level. Now, the fact that we're above it, we should treat this as a level of support, especially on a monthly level. On a monthly time frame, it should be able to provide a nice level of support for us. So what I'm going to do is I'm going to get that delineated, that midpoint, like so. I'm going to make it red, and I'm just going to write monthly consequent encroachment because it's the midpoint of a fair value gap. We'll make that red, we'll move that to the right, and we'll also center that like so. And I'm going to just get rid of this, and I'm also going to get rid of this fair value gap just because I don't want it to be, translated down into the other time frames. So in terms of draw, if we're looking for us to try and fill this imbalance, that means we're looking for us to trade up to the very high of it, which is right here, this low. So I'm going to mark this out in blue, and we can use this almost as a target for price now that we know that that's the high of the fair value gap. And again, I'd like to think that this 50% level, the fact that we're above it should be able to provide a nice point of support. One thing that may be interesting to look into as well will be the 25% level. So let's get that delineated as well. We'll make that red as well. But this time we'll make it dotted just so that we can decipher that it is the 25% level. And then once we drop down to the lower time frames, we'll take a look. But ideally, price shouldn't need to come back down here if it is going to reach up and fill the fair value gap in completely. Now, on a bigger scale, you can see that there's just a lot of back and forth price action, but because it's on a monthly time frame, it doesn't really matter too much because we can still get in on a lot of trades and a lot of movement in general when we're trading in one direction. As in, although we're clearly whipping back and forth each month, because it's on a monthly time frame, when we go down to the daily, 4 hour and 1 hour, which are the time frames which I'm generally trading on, it doesn't really concern me to see so much consolidation. Now, if I was on, say, the 4 hour and I was seeing price action like this, it wouldn't be ideal at all. But like I said, the monthly, there's still loads of trades we could have done through these months, here, and obviously right now you can see we're coming back inside the range. And then another thing to take note of is the actual trading range that we're currently in. So if we look at the last up close candle here and drag that right down to the bottom, you can see we've just traded to the 50% level of this trading range. So we are expecting some kind of retracement, because what happens when we reach the 50% levels is that basically we expect some kind of pullback and then a continuation, assuming that price is going to continue to act bullishly. So that's another thing to take note of on the higher time frame, just as to where we are. And then another thing as well is that we've got to think about premium versus discount. So I'm going to quickly just change my charts just to show you what I mean by that. So everything in the green area is what we call a premium, and everything in the red area is a discount. Now, price simply switches between premium to discount, discount to premium, etc., etc. So we need to take that into account, and we need to assume that price is trying to trade into some kind of premium PD arrays. Hence, we have this level right here. We do have this bearish order block up here as well. That will be a premium PD array. Let's just try and get that marked out like so. However, our first target is going to be here, and again, the lower time frames will likely give us more context as to whether we can expect price to either turn away at the 50% level, which it very well could do, or we see that continuation that we may be anticipating. So I hope that makes a little bit more sense. Let's now drop down to the weekly and take a closer look at price. So you can see how we've had a beautiful expansion to the upside. We do have a breaker here, low, high, lower low. So I'm going to mark out the high of this. Now, I'm not expecting price to necessarily trade back down into this for now. I do ideally want to see another up close week, especially with the fact that we have a fair value gap up here. It's the high of the monthly fair value gap I was talking about, and there's a bearish order block here as well. So as far as I'm concerned, although there is a breaker here, I don't necessarily need to see price trade down into it. And in fact, if we do leave this gap open and we don't see price even trade below last week's low, that will hint to us that price is a lot more bullish, and then we're likely going to see that expansion that we're anticipating. So this is a breaker again on the monthly, but because I'm not really anticipating price to need to come back down into this discount before we reach up into this premium where I believe price is drawing to. especially the fact that we're above the monthly consequent encroachment like so. So what I'm going to do is I'm going to destroy this because I don't really need that. And then we're going to pay some more attention to these premium PD arrays that we have up here. So we have a beautiful fair value gap right here between this low and this high. Let's drag that out. We'll make this blue. And we'll just simply type weekly fair value gap. And we're looking for that to get traded into, aren't we? So we can use this as a nice premium that we can anticipate price to trade towards. I am going to get rid of the midpoint. And then also this range. So right here, there is some kind of consolidation that likely happened here, and we'd like to think it could provide support. So what do I mean by that? Well, when we see wicks like this, so we traded higher, then lower, and then lower, and then higher, we know that when we go to the lower time frames, we're likely going to see some consolidations, and this will likely be what we call original consolidation. What adds to that as a supportive, measure or instrument that we can use is the fact that it's lined up nicely with our 25% level, remember, from the monthly. So it's not unusual to see price act like this at these 25% levels, and the fact that we've expanded away from it above the 50% level, and then we have these premium PD arrays up here, is another reason why I don't necessarily anticipate price to need to drop down below here. So in terms of moving to the new week, ideally price doesn't drop below this box, between this high and this low, and as we get to the lower time frames, it will make a lot more sense. But generally speaking, I'm expecting and anticipating price to find support in this if it is to drop down into it, maybe to create the low, and then I'd like to think that we can see expansion towards, again, our weekly fair value gap. Now the real fair value, not the real fair value gap, but the more specific fair value gap will be between this low and this high. And the reason for that is because there's only downside delivery here. So this is the imbalance I ideally have my eyes set on. So don't get me wrong, price can fill the entire weekly fair value gap. However, between this low and this high, you can see there's only downside delivery. So it's here specifically where I'm looking for price to want to draw up to. Now, one thing I haven't done, and I need to do right now, is look at what kind of high impact news we have this week. So just bear with me 1 second. We'll go into my FX book. And this week we have high impact news on Tuesday with Empire State Manufacturing. We have retail sales on Thursday, and then we also have building permits on Friday. So to be honest, it is looking like a classic week in terms of when we have news: Tuesday, Thursday, Fridays. What I mean by that is that jobless claims, weeks like these tend to be quite easy going, and that's just based off my experience in terms of wanting to see an easy delivery. But we'll talk more on that later this week if I am able to post, but I'll talk more on that later. So let's go to the daily anyway, and you can see we've had a lot of up close candles, beautiful expansion here above that 50% level. You can see price is finding a little bit of support there, and again this range right here where we had this consolidation, which I am going to treat as original consolidation, I'm looking for it to provide support in the new week. So moving into Monday, Tuesday, and maybe even Wednesday, I am happy for price to drop down into this range. Any lower than this range, I will get suspicious, especially the way we've expanded above the 50% level, especially the way we've wicked into the 25% level, and we also have a down close candle here, which is technically acting as a bullish order block. Now, although it's a really tiny, daily candle, we should still look at the open of it and expect it to act quite bullishly and sensitive to price. So I'm going to mark this out as a daily bullish order block. We'll make that black, and I'll just thicken this up a little bit. So it will be nice to see if price can drop down into here, and like I said, if I do see price start to fall on Monday, Tuesday, maybe even Wednesday, that won't concern me so long as we're respecting this range right here. However, moving into the Thursday and Friday, that's when I'd want to see like a classic Thursday reversal of some sort and potentially see some more expansion to the upside, especially considering we have some beautiful relative equal highs now between this high and this high. There's going to be buy-side liquidity residing up there. So again, if we avoid taking out this buy-side liquidity early in the week, so Monday, Tuesday, Wednesday, we're not even trading up into these premiums, it's likely going to want to accumulate more positions down here. This will then act as a propulsion block, and then we can think about potential expansion into our ideal target, which is up here. And again, you can see a nice daily fair value gap here as well. So we do have a nice draw on liquidity. It's just a matter of being able to look for those setups that will form when it drops down into the discount. And what can help us with that is the same premium versus discount I was talking about. So if we look at the current trading range on the daily, between the last down close candle, we're going to be looking at this low, and we're going to be looking at this high. So if I drag like I did before, we're in a premium now, and we know that price simply flips between what? Premium and discount. So it'll be nice to think that price will now start thinking about looking for some kind of discount PDA raise. We have this fair value gap here, and now we can drop down to the 4 hour and see if we can find anything else. And you can see we have a host of bullish order blocks, and we also have a lot of swing highs that price may want to refer down into. Especially the way we consolidated towards the end of last week, I wouldn't be surprised if we saw price drop lower again to accumulate some kind of stops. One thing that might be smart for us is to mark out this as sell side liquidity, because we know that's the 50% level. So we want to. So if we're going to be buying and we're expecting price to trade up into this premium, we want to be buying below this level because it was the 50% level of the trading range. Let me say that again. If we're expecting price to trade on higher, we want to be buying in a discount which is below this level, because as you can see, that is the 50% level of the current trading range. But what would we be buying on? Well, that would be a simple matter of looking at the bullish order blocks, such as here, and ideally seeing price respond to those accordingly. Now I am looking quite hard trying to figure out where the breaker, so to speak, is, which will be the last down close candle before the last up close candle before the down move that caused the movement higher. Now these highs right here is what I've got my eye set on. It's quite lined up nicely with this fair value gap. I don't want to get too specific, especially not this early in the week. I tend to let Mondays trade anyway, but I'll just draw our attention to these anyway in the discount, because like I said, if price does start to work its way down here, at least we have some kind of idea as to where we'd expect or anticipate price to want to turn. Remember, this is a daily bullish order block level right here, so ideally price shouldn't need to get any lower than this. Any lower than this, we get suspicious and we start thinking about these lows. But you can see price is on the buy side of the curve. We have relative equal highs up here, and we have our drawn liquidity in the weekly fair value gap. So as far as I'm concerned, you know, any kind of drop would be suspect. Just like this was suspect, just like this down close candle suspect, just like this run on stops was suspect before we had the expansion to the upside. So it's going to be an interesting week, but like I said, looking at the news and things, I would like to think it will be quite, not easygoing would be quite naive for me to say, but generally speaking, we have a nice trading range to look at. Here's the breaker, and you can see it lines up with the daily bullish order block. We got a low, we got a high, we got a lower low, and then price breaks to the upside, and look at how price came back down into that up close right here. See how price traded back down into that and then expanded? And now price has a very, very big habit of returning to original consolidations. So if we assume that this is the original consolidation, why? Because we returned to it before the expansion. We got a low, high, lower low. If we drag that out again, I just said price has a habit of returning to that. So again, that's more reason as to why I wouldn't be surprised if moving into Monday, Tuesday, Wednesday, etc., we saw price work its way down, especially early in the week, to get that manipulation phase in. Any lower than this, again, start being concerned, but we can talk about that later in the week. So that's going to be everything for dollar for this week, what I'm expecting. I hope that will make sense. Before I do move on, I don't know if I'm going to be able to post Monday through Monday or Tuesday, purely because I'm not at home basically, so I won't be able to post from the hotel. However, worst case, Wednesday will be the very latest I'll be posting this week. And then the weekend I am on holiday. But nonetheless, if you join the Discord and you want to drop any questions or drop any messages, I am active in there. And, you know, if I see you guys actively wanting a response from me, I'm more than happy to take a look over this week. Anyway, don't forget to drop a like, drop a comment, blah, blah, blah. Let's take a look at GBP USD. So if we're expecting dollar to expand on higher on the monthly as well, we can start to apply the same logic to pound. In terms of drawing bias, ICT made this very simple. It's just looking at the last. So if we're expecting price to trade lower and we want to know, okay, where's it going to? We just need to look at the last down close candle. Simple as that. Now, I'm not saying it's that simple, and we're not saying that price is necessarily going straight into that, but it gives us some kind of direction or idea as to where price is likely trading to. We also have an implied fair value gap. So there's a few things I'm going to mark out right now. First, let me just make this black. I'm going to type in monthly bullish order block, because that should be very sensitive to price. And then you can see we have an implied fair value gap. Now, ICT's taught this once, and I keep saying this, he's taught it once. Basically, in this range, as we drop down to the low time frames, we should be able to identify some kind of imbalances. So I'll keep an eye on this. I'm not going to keep it open just because it will get messy. But we're going to be looking at this range as we drop to the weekly and daily to see if there's any PD arrays in here that we want to use to our advantage as to where price may want to draw to. Now we can do the same thing about looking at premium versus discount, and I'm looking at this range, and you can see we've just hit the 50% level. So assuming we're going to trade into a discount, we're looking for discount PD arrays. We've already marked out one monthly bullish order block. Implied fair value gaps are not very strong, so to speak. So as far as I'm concerned, this is all we need right now until we drop down to the lower time frames. Another thing I want to talk about as well is this wick right here. We can use this to help us create boundaries almost. So wicks are gaps too, so we should treat them as so. So assuming this was a fair value gap, the fact that we've closed below, we're below it now, it means that if price was to return to it, we should expect what? Resistance, because it should act as now as a bearish order block. A bearish fair value gap. Again, we can't see much on the monthly here right now. However, as we drop down to the lower time frames, we can use that, knowing that okay, in this range and in this premium and any kind of PD arrays residing in this range, we can assume that price is going to use it to send it lower, because that's our bias based off dollar as well. So let's now go to the weekly. We'll take a closer look, and we have quite a nice setup in terms of what we see. So I want to see a down close week. What does that mean? I want to see an up close. I want to see price create a rally early in the week, Monday, Tuesday, Wednesday, and then I want to see price dive deeper into the discount. So remember, I'm saying that this range should provide resistance for price, and more specifically the 50% level should provide resistance to price, and that just happens to line up with this beautiful fair value gap in the premium. So what we're going to do is I'm going to get rid of this. I'm going to get rid of this just because we don't need that entire range, and I'm just going to look at this fair value gap, because again, price may want to take out last week's high and then use that as resistance, as a premium, to then trade on lower. Why would it do that? Again, we're looking at the same thing, premium versus discount. So we're looking for price to retrace into itself before it digs deeper into its targets and whatnot. Now this isn't a good example of that. Why? Because you can see it's above the 50% level. So how would you tackle something like this? And this is where it becomes, I guess, complicated, so to speak. Technically, our trading range between this low and this high, but the fact that we're below the 50, right? Look, we can do this as well. ICT does have a video teaching this. I completely forgot what it is. If you want me to find it, drop me a message, drop me a comment. But my point is, we can split it into quarters, and we can see we're in the although we're in the discount of the entire trading range, we're also in the discount of this trading range. So this premium may be enough, but nonetheless, at least we have a drawn liquidity. So let's mark out a few things. We know that we have some sell side liquidity residing below here. We have our monthly bullish order blocks trading to down here as a drawn liquidity in general, and then we've got a beautiful weekly low below here as well, also coupled with a fair value gap, which is what we call high probability. Now I'm not going to mark out the fair value gap because I'm just happy for lows like this, swing lows here, this is where I take off my stops, generally speaking. So if I'm in a short position, once we get below this low, I might take off 50%. Once we get down below this low, I might take off my full position. It's not a matter of me necessarily wanting to see us fill the fair value gap, it's just a matter of targeting. Why am I using a fair value gap here? Well, because I know that if it gets above that 50% level, we're probably not, price probably isn't supporting what I'm expecting. Another thing we can look at as well is an inversion fair value gap. So between this high and this low, we drag that through. Again, this is more reason as to why any kind of premium up here should provide resistance to price, because we've traded up on the upside to create the fair value gap, and we've closed below it on the downside. So any kind of return back into that range, it should act bearishly to help us push lower. Anyway, let's go down to the daily, take a closer look. And again, I'm happy to see rallying on Monday, Tuesday, Wednesday. Price can rally all it wants, but as soon as it gets into this range and starts getting into these premiums, I'm going to be looking for shorting opportunities with the expectation that this sell side liquidity gets targeted and this sell side liquidity gets targeted as well. Now this is all assuming obviously that dollar in line drops, and we start to see a nice retracement. So again, I'm anticipating retracement. And ideally, again, I'd like to think that if this sell side liquidity is still intact, so if this still exists, this low still exists by Wednesday, then we can probably anticipate that Thursday and Friday we'll want to target it and run for it. That's how I'm looking at it. If we drop down below here Monday or Tuesday, then we'll probably continue lower and then find us, retracing later on in the week, and that's completely fine. We just adjust. But entering this week and wanting to see a down close week, I want to see retracement first, whether that means Tuesday or Wednesday. I want to see some kind of up closes before we start thinking about running into this sell side below here and here. And then on the daily, there's a little bit more of a clean fair value gaps for us to target in terms of imbalances to try and fill. So we've got here and we've got here. Now, why am I drawing the imbalances on this time frame? It's because when I am in that short position and we are running down into these lows, once we get below this low, although I might have taken off some of my position, we need to be comfortable and confident that, okay, we've got the most out of that move that we can. And to help with that, I'm like, okay, once it gets into the fair value gap, I can take off some more here, maybe at the 50% level of that, on the 75% level of that. That's more like trading mathematics, so to speak. I do need to talk more on that maybe later, but nonetheless, it's important to have it out on our charts. But yeah, generally speaking, I do let Mondays trade first. So even if Monday did trade below this sell side liquidity, I'd have to rethink things. But it wouldn't be, it's not unusual for price to maybe trade lower on the Monday, then Tuesday, Wednesday get the manipulation, then Thursday do the expansion and all the work. So we do need to take that into consideration as well. But this low is, I doubt that's going to last there very long. But nonetheless, we'll let Monday trade. Let's go to the 1 hour real quick, see what we can find. Not the cleanest, but again, if it leaves it intact, there's something suspicious going on, and that would be ideal because that can help us set us up later in the week. If it takes it out, say on Monday, then it's probably likely that we could get into more clean moves, moving against, moving back up and running back into this range, which is fine. But again, it all depends on how we see Monday trading, and especially after all this consolidation, not ideal whatsoever. So let's finish up on Euro USD. We'll start here on the monthly as well. And the same thing, we're just looking for price to trade down. Now you can see we've already traded down into this, which is interesting. I'd simply be looking at the open of it now as a target. So we can get that marked out. You can see we've also traded through a fair value gap, so we can treat this exactly the same way. We don't expect price to trade back above this. Ideally, it respects the 50% level, and then that can help us send us lower into the opening. Let's drop down to the weekly, and the same thing applies. So we've got a bullish order block open right here. We have some beautiful weekly lows right here, but we're looking for price to rally, or to some extent into early in the week up into this premium before we think about taking out this low, or even last week's low. I do need to do some direct comparison of pound, euro and dollar. I'll try and do that another day. But generally speaking, a nice bearish order block lined up with the 50% level. So we're looking for some kind of up closes Monday, Tuesday or Wednesday to create the high of the week, and then I want to see expansion lower. But again, there's been weeks where Monday, Tuesday, Wednesday will continue lower, and then we'll get another reversal later on, and that's completely fine. That's why I just let Monday do its thing, generally speaking. But nonetheless, we know our drawn liquidity, and if we start to see heavy bearishness and heavy bullishness on dollar, let's assume that dollar does start trading on higher. We know where we're expecting to go. We know we're expecting to go here. It's just it may happen earlier in the week than we anticipate, and in that case, we just switch our bias and expect the Thursday reversal to send us lower as opposed to higher. And that's assuming it happens before Wednesday. But let's say we do drop lower before Wednesday, then we know we're probably going to go higher for the rest of the week. So there's different things, there's different indicators, like those indicators as in price action itself, that can help us with that. But generally speaking, I would like to see some kind of rallying. It's just hard wanting to see something when you can see there's a clear draw for price to get lower, and entering a new week knowing that price is this heavily bearish, it makes it difficult because it's a matter of trying to figure out when that manipulation is going to occur. And like I said, it could very well be that this drop lower could be the manipulation, and later on in the week we see that pull back. But nonetheless, we have our PDA raise marked out. We know what we want to expect. We want to see a down close week. We want to see us wick higher, ideally in the week, into some kind of premium, such as this bearish order block that can help send us, give us shorting opportunities to then send us down into our discount PDA raise, fill this beautiful fair value gap, and we have a nice little breaker here that should be sensitive to price as well. So that's going to be everything, guys. I hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord. Again, I'm probably not going to be very active other than Wednesday this week because I'm going on holiday. Thank you so much for watching nonetheless. And yeah, join the Discord, drop a message in there. No one's actually active in there, but guys, if you send me a message, I'll reply. Anyway, thanks so much for watching, and I'll catch you in the next one. Peace.